Hi traders, welcome to Trading Week Ahead with me, Ken Calhoun, where you'll see my top picks for the week ahead. Featuring stocks and ETFs, you'll also get to watch my top Forex trading picks, plus see what's new with E-mini trading and more. All information is for educational use only. Don't make actual trades based on this. Instead, learn how to trade with me. Now, let's see what's going on in this week's markets. Hello traders, Ken Calhoun, DayTradingUniversity.com with our Trading the Week Ahead video episode for the upcoming week for June 13th, 2011. Our NASDAQ Composite has been selling off here for the last couple of weeks. This is the 15-day chart of the NASDAQ Composite. You can see Bear Cup lost the 2740, taking out new lows. However, I'm not going to be looking at aggressively shorting this market and scaling into my short ETFs, which I'm in on small size and have been for the last couple of weeks, which is good. Like QID, it goes up when the broad market goes down until the NASComp loses major support here at under the left side of the cup. You know, I'm an expert in cups, and one of the things that I look at in the broad market is not only the 50, 100, and 200 MA lines, but horizontal support and resistance. And you can see here, see this kind of large head and shoulders pattern. It's still not a sell-off in the market on size unless we get under 2600. So that's the key inflection point that I'll be looking at as major support for the markets. We are testing, not significantly under, but are testing right now and may bounce off of the 200 MA at the 2650. So for that reason, I'm cautiously scaling into the short exchange traded funds like QID and others. BGZ, another one. There's a lot of them out there. For more, learn from my ETF mastery system. But in terms of specific plays, one of the things I'm doing right now is scaling into the short ETFs as the market sells off. And we're going to look at not only our stocks, ETFs, but also Forex pairs and our E-minis, at least the S&P 500 ES E-mini patterns in this week's episode of Trading Week Ahead. Before we take a look at the technicals, let me give you a few quick trading thoughts that could impact your trading outcomes in the month ahead. Here in the USA, our national attitude's highly concerned about ridiculous national debt, now estimated at over $550,000 per family on average, with politicians promising to take from the rich and give to the poor, and free health care for everyone. I do not like entitlement mentality socialist politicians. There's a recent study that says average Americans will need to work into our 80s to survive. There's flash mobs attacking people in big cities, a broken economy, permanent loss of jobs overseas, higher taxes, states going off on their own to try and fix things like illegal immigration, and broken promises from overpaid politicians with the moral character of white-collar criminals. It's outrageous. Add to that sorry mix all the opportunistic internet marketers pretending to be traders, preying on desperate, unsuspecting folks, and their legion of paid-off affiliates trying to constantly peddle overpriced magic bean trading software and non-working courses with too many emails, and traders are fed up and deeply skeptical, rightly so. You need to take things into your own hands because the government is not going to be of any help, and neither are the rip-off trading industry vendors. Instead, learn how to trade the right way over time from genuine people who are established, published, well-respected industry trading experts, not the marketers with their slick but patently false videos and email launch campaigns. Instead, watch the charts, look for patterns on your own, and see where the trades are most consistently. It's a skill that takes years to learn and a lifetime to master, and it's certainly not easy, but it can be done. See how to trade independently of software or trading rooms, because that ultimately doesn't work, at least not on its own. You need to develop trading skills like a professional does, painstakingly over many years. So to recap, the economy's in the crapper. Avoid the internet marketers out there and expect that learning how to trade will take many years, and still most people aren't successful because it takes a lot of hard work. That's the bad news. Well, the good news is there is a light at the end of the tunnel. Just be very careful from whom you trust. Test out the free content from people to see if it does work, and then and only then gradually start engaging with them or buying their products and services if they have credibility, if they're well published in the trading industry magazines, if they're speakers at major expos, if they have video testimonials from traders who they've helped, and the rest of it. That all adds up to a picture that can hopefully be more successful than what you've been led to believe or given out there from the government and the internet marketer faked traders out there in general. Anyway, let's take a look now at our technicals for the week ahead. Let's start by looking at which stocks are in motion despite an overall sell-off market, because that shows contrary or relative strength to the broad market. AIG is coming back here. It's coming off its earlier lows near 27 support from several days ago. This is a 2-day chart. You can see we're currently up at just under 29 resistance. So keep an eye on this one. A good high volume 2-day high breakout cut pattern close. One of the patterns that I like to keep on the radar for entries and exits. Look for entries and exits outside of the current day's range during the week ahead. Another one, BAP. A good wide range chart here. You can see on Thursday it moved 85.5 up to 91. On Friday from 90 to 93. Still a good 3-point range. This is one that had been a large gap down and bullish cup recovery. So keep an eye on this one, both long and short, outside of the previous day's range here, using 90 and 93 as support and resistance to see if there's a trade set up for that. Next one, IPI. I like the range in this. The volume's not over my 15,000 share per minute threshold, so may not be so good for intraday trading, but certainly worth keeping on the radar for a swing trade in case it gets back over the 32.5 or so in the upcoming trading week, just because we had so much volume on the Thursday session that took it up to new highs, and we'll see if that one moves up as well. Also keep an eye on X, a US Steel. You can see that on the 15-day chart, current resistance is near 44. This isn't a great chart. This is a bear cup breakdown, but if it, see how it makes, perfect previous support becomes new resistance. We'll see if it breaks out over, say, 44.25 or so in the week ahead. If not, we'll see if there's new short opportunities under, say, 41.5. Just keep an eye on it outside of this current box range. I like US Steel. I've traded this one for years because volatility usually is pretty good. The lowest percentage trades of the equity trades, but still worth keeping an eye on, are two of our gaming stock setups here. MGM and LVS are my two favorite to trade in that industry. The low 12s are relatively oversold for MGM. Just being an MGM trader, I know that it's may well find support soon, so keep an eye on this one. We've already gotten some buying up to just under 16, which is its major long-term resistance. It's sold down here to 12.5 or so. That may provide a decent buying opportunity if we get back over, say, 13.25. And again, all these alerts are for paper trading, educational use only, etc. But I'll just tell you what I'll be looking at for trades myself in my own capital accounts. Anyway, if we get back over 13.25, 13.3 or so, I'll be looking at scaling into this on a potential bounce. Short setups would be under, say, 11.7. But I prefer to just buy this on a bounce. If it comes back to life, may do so soon. LVS is a better one for intraday trading simply because the point ranges are larger, either for bear cup short breakdowns like that or for swing trading bounces. If it comes back to life over, I'm going to use roughly 40.25 as the long trigger and start to scale into it if it gets over 41, because that's a bear cup, perfect bear cup in fact. So I'll start putting on small pilot share test trades if it gets over 40.25, but I won't be interested in trading this on size unless it gets over 41, because you can see that's a bullish cup breakout, bearish cup support, bearish cup, and then breakdown here. Tried to come back to life, wasn't able to, sold down to new lows. Overall, this is a seller's chart. The better plays would be to short this under 38, say 37.7. Earliest long, again, around 40.25, a test trade, small share trade. I'll start to scale up over 41. Anyway, that's our equity charts. Best odds charts out there right now are playing the short ETFs to the long side. So let's take a look at those right quick. QID, one of my favorites, and this is one I trade actively just because it's taking out new 15-day highs as our NASDAQ composite. If you remember, the NAS comp looked like that, and the Qs look very similar, right? Same pattern. Well, earliest long on the Qs, I would use the 56. 56 is the nearest whole number resistance. I really wouldn't be scaling into this thing on size unless we get well up here over, say, 57.25. I don't like trading the Qs right now. I prefer the QID. I don't like plain bounces. I prefer breakouts, of course. So if we get over, say, 56.5 in the QID, that's one to look at. Another one, of course, is FAZ over 52.7. We'll see if that one takes out new highs. BGZ, same story. Remember my rule of nines. I don't like to buy things right under decade resistance level, so I would not be buying this at, say, 39.7. Instead, I'd wait for, say, 40.25 to get into BGZ on an upside breakout. And the last of the ETFs continue to be our silver, both the silver long here, SLV. It's currently in the middle of its 15-day chart, so not real exciting yet. But keep an eye on this one. Either short breakdowns under the 35 or long bounces over, say, 36.25 or so. If we get outside of those whole number support and resistance brackets, the 35 to 36, I'll be looking at trading that. I also like ZSL. I prefer ZSL. In fact, if we take out new highs, it's the silver short ETF. Would not be scaling into this on size unless we break over each whole number, say 18.25, 19.25, and I will start scaling in on large size if and only if we get over, say, 20.5, 20.7. And again, reason for that being it's sold down from the hundreds, 120, 30 back a year ago. Large institutional action here buying up this, and we'll see if that's able to dry up supply and we start to see a demand curve if this bounces. But so far, still kind of intermediate, so not real aggressive on this, at least until we break out over the 20. Now let's switch channels over to our Forex pairs, and you can see here, this is our British pound to the US dollar, the cable taking out a bear cup low under the 1628. We'll see if this is able to take out continued new lows under the 1620. Earliest long would be over, say, 1632 if we recover over that. But this is a sell-off pattern, kind of an isolation. The story pairs right now are the euro because it is going down against everything. So look for continued weakness in the euro if it takes out new lows. You can see a large 7-day bear cup, and I like the fact that the red ADX signal line is over the 30. Again, for more on cups, see my article in the June 2011 issue of Stocks and Commodities magazine. I've got examples of not only equities and ETFs, but also the E-mini and Forex cup breakout and breakdown patterns to learn from in that issue. Anyways, large bear cup here, 143.20 as the immediate support. I would not be interested in buying this unless we get back over a minimum of this support line under these the shadows of these candles here. So over the 1,444 plus 40 pips would be the earliest long. Prefer to see this break down and sell this on new lows. And this is the euro dollar. Same pattern in the euro CAD. And same technicals, right? We have a bear cup breakdown, finding support here, making a hammer, or I'm sorry, almost a hammer here, but forming a handle of the cup here. Look for hammers and shooting stars as always in our currency pairs using the 60-minute chart. For more on candles, be sure to learn from my colleague Steve Nissen. He's the expert in candlestick charts, but look for handle pattern breakouts and breakdowns right near the 7-day. So I'll be looking to sell this if it gets under the 140. Earliest long I would use be just over this 141. So that would be the earliest long signal to look at for our euro CAD coming up in the week ahead. And the last one for our currency pairs is the euro yen, and you can see here, and always look for these cup patterns. Left side comes up, comes back down, and it usually sells off under a bear cup loss. Same thing on bullish cup breakouts to the upside. Right now, the currencies, the world currencies, are largely in decline, and so look for correlated currency pair breakdowns if you're a Forex trader. For example, weakness in the euro, just take shots at whatever's taking out new lows on the 7-day against whatever it's trading against, and give preference to those that have ADX signal lines over 30 for trades in the following day. So this one under, say, the 114.8 for our euro yen for a sell. Earliest long, personally, I'd be kind of skeptical about a bounce, and I wouldn't be buying it until it gets over 116.6. I would not be buying within this bounce region or this initial consolidation, but instead make it get over the upper shadow of this almost hammer type pattern, right? It's close to a hammer, and you can see sure enough it bounced off that. I would wait till it recovers the hammer high over 116.6 before looking for long in the euro yen. So that's it for our currency pairs. finally, let's take a look at our E-minis for our ES traders out there. And you can see for this instrument, the big picture I like to look at is the ADX, as always, plus a 3-day chart with Bollinger Bands on a 10-minute chart. And there's a few good reasons for that. To learn more about that, of course, you can go to my eminiuniversity.com site. I will be doing periodic live trading room sessions. In that, we just wrapped up a very successful series with 3 sessions recently and made some really good calls, and look for more from videos and course materials and so forth from that site in the months ahead. But in the meantime, just test this pattern for yourself. Look for these large cut breakdowns and breakouts using a 3-day chart. I teach traders more on how to use internal pivots off of B-bands with the 10-minute candles, and also look for candle patterns like hammers and shooting stars in these charts. But for now, just keep an eye out for if we get under 1260 in the ES or get back over 1276 is major obvious support resistance levels that are set. I should say not so obvious, they're right outside of, carefully designed to avoid false breakdowns and breakouts to the upside. So 1276 the long trigger, 1260 the sell. We'll see if we gap out of that or continue to take out new cut patterns in the E-mini during this upcoming trading week as well. Alright, well, with that, I wanted to thank everybody for being a part of Day Trading University over this last 11 plus years we've been in business. You can see that with our markets selling off, and again with the big picture testing the 200 MA line, look for a potential bounce, but preferably a breakdown short or sell-off market if we get under 2600. Now, though, is not the right time to be aggressively shorting and selling things because we're right at 2 support triggers, one being the 200 MA at the 2650, the other being the horizontal support at near 2600. If we get under 2600, though, watch out below, and I would use a safety buffer of at least, say, 10 sticks at 10 points. So 2590 would be the specific sell trigger in the NAS comp. If we get under that, a good time to, at least I'll be scaling into my short ETFs on breakdowns and looking at intraday shorts for sell-off patterns in stocks, ETFs, and other instruments. So with that, keep an eye out on the week ahead. See what you can do. Test trade, paper trade with some of these short ETFs like QID, SDS, SMN, BGZ, VXX, and the other short ETFs that are traded on heavy size. Paper trade those. See how you do. And best wishes for success in the trading week ahead. This is Ken Callan, Day Trading University. Trade well out there. Be smart, do well, and I'll see you next time. Goodbye.